Folks, welcome to the Rate Update with Dan Frio. My name is Dan Frio. What I try to do on this channel, I try my darndest to educate you guys on real estate because there's so much bad information out there. What I try to give you guys is the economics behind housing, so then you can decide, well, maybe is your area a good place to buy, or maybe is it a good place to rent? So I'm going to give you all the information you guys need to know. We can also offer you pre-approvals, and we even have a free system that will vet realtors in your area. So if you're looking for a house and you really don't know a realtor, we'd love to help you in that area as well. So without further ado, let's get over to mortgage rates. Now you see mortgage rates about 30 days ago were about 5.99. We're teetering now on the highest rates. Well, if you look here, this is where the highest rates were in the last 52 weeks. So over the past year, the highest rates we've seen were 7.375, and we're teetering on those really fast. Just rewind about 3-4 weeks ago, maybe a little bit more, we're about 5.99. So these are going up and up fast. What's all behind all this? Well, you have the scare from the banks, and then you had the debt ceiling, and then you had this, and you have that, and you have so much other stuff. So today we're going to concentrate on what's in the mainstream media news is Treasury yields stumble as investors anticipate a debt ceiling. So what's happening right now is, if you didn't know, the Federal Reserve is saying we're going to be out of money by June 1st. Well, they just moved that calendar event down to June 5th. So like I said on my video last week, I said, guys, this date isn't etched in stone. It'll move a little bit, and however the politicians, look at it, we might need an extra couple days. So there's a lot of maneuvering with those numbers, I'll say. But right now, over the weekend, we might have had a deal when it comes to the debt ceiling. So let's get over to the mainstream media. We have debt ceiling bill faces a tough path in the House as GOP opponents grow, but I don't think they're gonna have enough votes there to not get this thing passed. So you're gonna see on media and everywhere, oh my God, is it gonna pass? Is it not gonna pass? And they're gonna run this as long as they possibly can. But relax, guys. Even if it doesn't pass in this session, it'll pass fairly quick, and the Social Security checks are going to go out because they came back last week or over the weekend and they said, well, the debt ceiling now isn't June 1st. It's probably going to be more like June 5th. So think it through. Now you have all the Social Security checks that go out between the 1st and the 3rd. Those are going to get issued. So those already got pushed out. And that was the biggest fear that a lot of people say is, well, the Republicans, they don't want you to get your Social Security checks. Well, in this bill right now, those checks have been going out and they will come up with a deal. If it doesn't pass this time around, it will pass probably within the next 48 hours. You heard that here. So the next thing we want to go is, this is going to drive people bonkers. And the people that especially say, I'm going to drive you bonkers, because they give you so much bad information. Here's another topic that they never talk about. Home prices declines may be over. And they're going to say, well, it's Case-Shiller. They have all this false data. Well, guys, you have to take your data somewhere. I'm going to start using CNBC again because you guys are out there saying, why are you boycotting CNBC? It's a huge channel. Do they deceive you or not? Well, I got to use some kind of channel. So the home prices decline may be over, says Case-Shiller Index. Let's look at the crash that people have been saying about. Nationally, home prices in March were 0.7 higher. Okay, then March of 2022. So if they're 0.7 higher than they were a year ago, I guess we went up and then quickly down. That could be it. But I'm still don't see where people were saying, there's going to be a crash. Now, we've learned, though, last week from many of the mainstream media and YouTubers that a crash now is deemed 15%. So I might be on that bandwagon. If you're out in Southern California, or maybe you're in Austin, Texas, there might be areas of the country that's going to see 15, 20% declines. Why? Well, they saw 40 and 50% increases over the last 2-3 years. So those are going to give back more than the other areas. A lot of areas don't have that much to give back. They don't have 15% to give back. What's holding all this, guys? I'm still saying it. Seasonally adjusted house, the number of houses on the market. Okay, if you don't have a ton of houses on the market, you're not going to have a frenzy. You're not going to have basically a fish frenzy. You ever go to the pond and you throw bread out, and if there's one fish there, it just gobbles it. But then all of a sudden, all these fish, it's FOMO. Well, that's what we saw. Well, now we're thinking, think of this. If you're sitting on the sideline for that crash, and let's say I'm a savvy investor. So now I know that your definition of a crash is 15%. So in my analytics, now remember, I'm a savvy investor. I'm going to put in my analytics, when home prices get down maybe 10, 12%, let me know, because I'm going to go in and gobble up the market. Okay. Well, if you're sitting on the fence waiting for the 15% decline and we're down 10, you're going to say, there's more to come. Well, on me, the savvy investor, I know everybody, huge amounts of numbers are in the background just waiting for a crash or mortgage rates to decline. So if you're one of those out there, good luck to you. But if you're a savvy investor, the people that are educating you should tell you when's a good time, what should you be looking for, and that's what we're trying to say on this channel. So I'm not a proponent saying the world's going to crash. I'm not even a proponent saying the national, when you look at national numbers, I'm not even into those numbers. I want you to focus in on the areas that you're looking in personally. Do you care if Austin, Texas the house prices are unaffordable? No, because you're not buying in Austin, Texas. Look in your local area. So if you don't know what prices are going on in your area, please reach out to us. We'd love to hook you up with a realtor that knows your area, because we're going to vet those to make sure you're working with a really, really good realtor. So without further ado, let's just get back to the topics. So we see here that home values are not crashing like many people are saying. And it basically gets down to here just saying there's just not enough inventory. Okay, so I'll put this caption or this video link down below so you guys can check it out on your own. The next thing we're going to go over is what's going on with mortgage rates. Well, I got some bad news for you guys. It looks like now that the Federal Reserve will be raising rates one more time, and I'm going to show it to you right now. So right now, what the Federal Reserve controls is what's called the federal funds rate. You're seeing it right on your screen. The federal funds rate now is between 5 and 5.25. That's the cell that they work on. The expectations, I got bad news for you guys, folks. Let me get my head out of the way right here. This just popped up and it just spiked up. Right now we're at 5 to 5.25 on the federal funds rate, and this is right here. What this chart's telling us is the next time the Federal Reserve meets on June 14th, what are they going to do? Well, the expectations now are there's a 62% chance they're going to raise rates one more time. So if they don't do it now, they're going to do it in the July meeting. If they don't do it now, then they're going to do it in the September meeting. And then there's nobody really saying that they're going to increase rates anymore from there. There's a 20%. Now, if you looked at this just a couple weeks ago, this column wasn't even here. Heck, this column wasn't even here. So we're having more and more people thinking, or economists thinking, that they are going to raise rates one more time. So that's what it's looking like right through here when it comes to mortgage rates. Where are they, or what's the trajectory with rates today? We have the debt ceiling looks like it's going to pass. So remember I said, well, you're going to see the stock market rally, and then you're going to see bond rates or mortgage rates come down. Right now, you can't see this, but the number behind here is up 30. That's fantastic. Remember for the last 2, maybe 3, maybe 4 weeks, this number has been down and down and down. Well, what in the world is this number? So what I follow as a mortgage advisor, I follow the mortgage-backed securities market because it tells me exactly what mortgage bonds are doing. So this is what's happening in mortgage bonds. Right now, the price is 99.36. That price is up 0.30. That means if the price of the bond is going up, what happens? Rates come down. There's an inverse. There's a flip-flop relationship here. So this is going to probably bring rates down about 1/8. So where are rates right now? Right here. So we might be teetering back in the 6s here within the next 24 to 48 hours. And that's what we're going to be focusing on this week. So if you like what I have to say and you're like, hey, Dan, I really would like your services, how do I reach out to you guys to get help? And I can get you help with a pre-approval. Maybe if you're looking for a reverse mortgage, if you're looking for a debt consolidation, a home equity loan, or just kicking the tires and like, how much can I really afford? Well, what do you do? All I need you to do is give us a call, 844-775-5626, or you can actually apply right over here. If you're ready and you're like, hey, I've been following you for a long time. I think now is the time I want to apply. Just apply there. If you rather just talk to somebody, you're like, I really don't know what I need. I don't know the fundamentals of buying a house. Well, heck, then schedule a one-on-one consultation right down below. We're going to match you up with a mortgage advisor on my team. Heck, you might even be set up with me that day. So, but that's our report for today. So good news on inflation. Inflation's starting to come down a little bit, but the Federal Reserve is supposed to raise the rates. On the debt ceiling, it looks like there's a debt ceiling thing worked out. So you're probably most likely going to see rates drop about 1/8 today once the vote goes through, once it's through. So what's happening right now in the government, they're saying, okay, we should have enough votes to pass this thing. Once it is passed, you're going to see the stock market rally and mortgage rates come down even further. So that's it for today, guys. Thank you so much for watching. God bless. Have a fantastic day, and I'll see you tomorrow. Bye-bye.